Welcome back. Over the first half of 2019, most emerging and frontier markets around the world closed in the green on the back of global central banks' easing narratives. However, major markets in sub-Saharan Africa were lackluster due to risk of sentiments. For the Nigerian Stock Exchange, which saw the exit of foreign portfolio investors while piling into high-yielding debt instruments, the game was no different. Channels Television business correspondent Tempo Ashaju has this report.
At the year's start, most analysts believe that the market will be on a better balance of risks in 2019, given the general sell-off that dominated market activities in late 2018, while a rebound was anticipated on the backdrop of cheap stocks valuations, as well as post-general election repricing.
Our market has gone through some bubble to some extent in recent past, with waning confidence from investors, whether you look at it from the perspective of the local or the foreign players.
With bearish activities on the local stock market, returns, however, weakened from a positive of 3.6% before the elections to a negative of 7.2% as at the end of April. By June ending, the year-to-date losses had moderated to a negative of 4.2%, thanks to primary market activities across some sectors, which include the Access and Diamond Banks merger, a number of acquisitions, divestments, and the listing of MTN Nigeria and Airtel Africa. Notwithstanding the positives within the period under review, major sectoral indices ended negative in the first half of 2019, except for the telecom sector, led in the main by MTN Nigeria.
The equities market is oversold at the current level. The recent developments that led to the downward trend in the crude oil price may lead to a downward pressure in the equities market. Nevertheless, investors should continue to buy value stocks.
In light of the poor investor sentiments, the question on everyone's lips is what the second half holds for equities, given the uncertainties in the fiscal environment and a slew of global developments of trade and currency fights. Temple Ashaju, Channels Television News.
Now let's examine this issue further, and we're now being joined by the Chief Executive Officer of AfriInvest Securities, Mr. Ayodeji Ebo. It's a pleasure having you with us.
Thanks for having me.
Now, at the beginning of the year, lots of analysts anticipated that the stocks there will be a recovery post-elections, but that didn't come through. How disappointed are you with this performance?
Yes, I think we saw a lot of the foreign investors, especially the foreign portfolio investors, for most of them at the beginning of the year, for most bet on the candidate that has more private sector-driven policies. And after the announcement, we saw that significant decline from a high in February of 4% year-to-date to a negative region about 5.3%. And when you look at it in terms of even the sectors, the consumer goods sector that topped in terms of the losers chart. And the major factor that have driven this is the pullout of foreign investors. In January, about 55% of the total transaction came from foreign investors, and that has gone down to as low as 33%. So what we're seeing now is domestic investors driving activities in the market. And the results that are supposed to also bring some form of succor to the market, investors looked away from that, and the sell-offs, especially from the foreign investors and institutional investors, continued.
But there were a number of primary activities that helped weather the storm during that period. Do you see them sustaining the market in the second half?
No.
Why?
It's majorly policy-driven. So we feel that there should be some specific policy for most of the foreign investors that have been supporting our market. So we can't say we can, for now, we still can't do without foreign investors. If they are going to, it has to be on a gradual phase. But you look at the petroleum sector, we need to be very deliberate in terms of passage of the PIB. You need to look at even the power sector. We need to see how we want to establish reflective tariff system there, reviewing the MITO. You also look at, in terms of even the market, investor education, that will also continue. So if we don't see some of those policies that can attract these foreign investors, what we'll be getting is more foreign investors going into fixed income securities at the expense of the equities market.
Now, it's typical of the market to record losses in the third quarter, but with those things you revealed out, can it reverse the negative trend within that period?
If we see some of those policies being implemented, that would reverse the trend. But you also, we've seen, when you look at the Q2, which is the half-year result, for the consumer goods, the industrial goods, for most of those results, their top line weakened. And that buttresses the fact that the growth rate, you look at the GDP growth rate in Q1 was around 2.1%, down from 2.3% in Q4 2018. Shows that the economy is still lagging behind the growth in population. It means every day as we wake up, poverty increases. So as long as we don't come up with policies that can jumpstart the economy at a rate that is above the population growth rate, then the consumer pocket will continue to be squeezed, and for consumer goods, industrial goods, the purchasing power will be impacted, and as a result, you don't expect any significant upside in terms of top line of the companies that are quoted on the Nigerian Stock Exchange.
CEO of AfroInvest Securities, Mr. Ayodeji Ebo, it was a pleasure having you with us on the News at 10.
Thanks for having me.
Here's pleasant travel news for users of Verve Cards, the leading payment technology and card business in Africa, and Discover Global Network, the payments brand of Discover, have launched the Verve Global Card. Through this partnership, cardholders will now have the ability to use their Verve Global Cards on the Discover Global Network, which provides acceptance in more than 190 countries and territories. The first transaction took place at a jewelry store in New York City.
It's a beautiful summer afternoon at the ever-bubbly Times Square in New York in the United States of America. Right in the middle of the hustle and bustle, famed jewelry brand Swarovski rolls out the red carpet for the groundbreaking arrival of a new player in the global e-payment system. Nigeria's leading payment technology Verve launches the Verve Global Card in collaboration with Discover Global Network. And the first transaction is done here in the city that never sleeps but dreams.
I think the immediate benefit is that when Nigerians travel abroad, unlike in the past when as they get to the airport, they forget about their Verve cards, we now want to encourage them to take their Verve cards abroad, knowing fully well, at least starting with the US, the Verve cards will be accepted across every location where you see a Discover or Diners Club acceptance mark.
Right on the shoulders of Discover Global Network, Verve has not only registered its presence in the concrete jungle city, but across the globe.
Verve has now become the only African card scheme to be global, and now Verve can now be used in 185 countries around the world.
We saw all the opportunity to partner with a really growing company like InterSwitch and Verve that's really expanding across Africa and be able to find a win-win where we can help Verve be the best that they can be, and Verve can help us be a great network across Africa.
3 Nigerian banks, First Bank, Access and Fidelity Banks participated and are proud to be part of history.
Part of InterSwitch, they've done very well because what everybody knows is Visa, MasterCard. Now creating this local brand that is not going global clearly is an effort mechanism.
It's a start of a new chapter for the parent company InterSwitch, ushered in with Verve Global's neon sign on the beaming screens of the Big Apple.
For more business stories now, let's join Kayode.
You first. First Bank.
Thank you, Melinda, and you're welcome to Business News. The Corporate Affairs Commission says it registered 220,773 micro, small and medium enterprises in the last 10 months. In a statement issued by the SEC's Public Affairs Department in Abuja, the market regulator explains that the MSMEs were registered between October 2018 and July the 31st, 2019. The SEC hints that it had also extended deadline for 50% reduction in the registration fee for business names by 3 days under its business incentive strategy, which is expected to end on Friday, August the 16th. The Commission is asking members of the public to take advantage of the 3-day extension to register their business names at the reduced cost of 5,000 naira. And outside the country, U.S. multinational media conglomerates CBS and Viacom have agreed to a $30 billion merger deal to strengthen their positions in a rapidly changing entertainment industry. Well, this becomes the fourth mega combination in the global media industry in about a year after Walt Disney bought most of 21st Century Fox in March. AT&T completed its acquisition of Time Warner in June, while U.S. cable conglomerate Comcast bought a majority of European pay TV operator Sky News last October. The new company, which is called Viacom CBS, will have more than $28 billion in revenue and the largest market share of U.S. television viewing audience. Let's head over to the United Kingdom, where unemployment picked up to 3.9% in the 3 months to June 2019, with the number of jobless claimants up 28,000 and average weekly earnings, including bonuses, higher by 3.7%. A new report released by the Office for National Statistics shows employment rate at estimated 76.1%. Employment for women was seen at 72.1%, the highest on record, and men at 80.1%, slightly lower than in January to March. The higher wage growth posted in the second quarter was the highest for the 11-year period, as more women were in employment. And as Nigeria's stock market prepares to resume from the Muslim holiday declared by the federal government, its counterparts in other parts of the world ended Tuesday's trading session with slightly mixed performance. Well, let's see their closing numbers. Thank you for watching Business News Tonight. I am Kayode Okikiolu. The news at 10 continues with Melinda.
You first. First Bank.
Many thanks, Kayode. Still ahead on the news at 10. Occupy Hong Kong International Airport enters second day. That and more calling from our London bureau in Around the World in 5. And the Tigress qualified for the quarterfinals of the 2019 FIBA Women Afrobasket Championship after an emphatic victory over Cameroon. That's in sports news. Join us again.